CB. Let's take a look at how things stand this afternoon. A little lower amid volatility, 200 points down on the Sensex right now. And we'll take a look at some of those gainers and losers for you, bring them up for you on your screen. Realty stocks in particular today have seen a bit of a crack power stock. So we've also had Adani Power down on lower circuit. So a mixed bag there across the board when it comes to what's really causing the decline. 0.5% lower on the Nifty and almost about 0.4% on the Sensex. 60,843 is where we're at right now. Let's take a look at some of the major index movers, then pull them up for you. Pretty much erasing some of the gains that were made after a pullback in last session as well. Infosys, Ultratech, SPLI, some of the stocks holding out at least for the moment. And we've got Kotak Mahindra Bank, Grasim. Let's take a look at the losers though and see where that pressure is coming in from. And UPL, M&M, Bajaj Finserv, some of the names on the downside there. Bajaj Finserv as well from the financials pack. Overall market cap down about over 1% as we speak, and clearly skewed towards the declines as well in today's session so far. So Amit Harchekar is joining us this afternoon. Let's take that to him. Amit, good afternoon. Metals, realty, we're seeing a little bit of a knock across the board today. What are you reading into the market move?
Good afternoon, Aabha. Market is clearly indicating that it has moved into a saturation zone, and that's why, despite multiple attempts, Nifty is unable to sustain above 18,500. Now, important thing is, we think now the market is prone to a major downside risk at current levels. The reason why is after the surge in JPY, I think market, especially the financials which were holding up, they picked up their gains, and there is a very high probability that Nifty could go down by around 15% if we see similar the strength in Japanese yen to continue.
All right. Is it also maybe the fact that we're hearing all these reports of COVID, Amit, and I know this is a macro question, but I just want to get your view on it. What are you hearing or feeling around you in terms of any kind of that uptick in the fear index versus the green index? Because until 2-3 days ago, everyone was still really confident we'll maintain these levels, we'd kick off to a good start in the new year. Things are looking a little jittery for the moment.
Well, but that could be one of the reasons. But as I said, if you see compared to the global markets, only Indian markets have started to decline in past few days. But if you see India's market performance since April 2022 to September 2022, I think India managed to outperform with a very wide margin. And that outperformance happened mainly due to a depreciation in Japanese yen. If you see Indian markets, generally, whenever the Japanese yen has depreciated, Indian financial sector has managed to outperform. And that's why if you see year-to-year gain in Bank Nifty, it's more than 20%. I think the main reason is that if Japanese yen depreciates, I think it's positive for Indian markets. And if it starts to appreciate, then you will see a lot of selling, which might happen in the coming days. So I think COVID could be one of the reasons, but I think overall, Indian markets are clearly showing you signs of saturation. And the way USDNR has moved above 82 and JPY above 62, I think it opens the risk of a significant cut even for the broader market.
All right. So what are some of the names that you're tracking right now? Financials have definitely taken a bit of a punch today, but they seem to be on everyone's radar. Would you buy into anything on dips?
Well, financials would not be a buy on dip. In fact, if you see the larger setup in Bank Nifty, it's clearly showing you that's where there was a rising wedge, and after there was an upthrust which happened at around 43,500, 44,000, and now the prices are moving back to the support line, which is at around 41,000. If we break that 41,000, I think you will see a cut of more than 15% even in Bank Nifty. The sector which is holding firm, I think it's only pharma, and I think if markets had to go down from here, I think you can expect good outperformance from pharma. Large caps like Cipla and Dr. Reddy, I think they should do well. But financials, I think they become the good shorting opportunity, especially if you see stocks like HDFC. We think it has a potential to go down by around 12%. ICICI Bank also, I think there's a good possibility that it could go and retest 820, 830 zone. So overall, I think financials are poised for a good amount of decline.
Okay, let's also get you some news from the sugar space, some positive news. Sources have told us that the government is likely to allow firms to export more sugar than presently permitted. Chetan joining us with more on that. Chetan?
Aabha, that's a positive news coming in for especially listed sugar companies the government is of course mulling to relax sugar export restrictions of about 60 lakh metric ton, which was announced in November, to about 80 lakh metric tons. So clearly, an increase of 33% is being planned from 60 to approximately 80. It would be done. What my sources are also telling me is that the government will review the production by the sugar mills next month and may decide according to that. The decision might not come, but yes, the government will take a look as to how much the sugar mills are producing and manufacturing sugar. And India's production in 2022-23 sugar season is estimated at a record 410 lakh tons of sugar before diverting it for ethanol. Remember, Ava, you know that the news is significant because of course, it will allow sugar companies to remove their extra inventory, but the recent GST cut on international on ethanol, in fact, and recent strength in international prices will, of course, boost further sentiment for listed companies like Balrampur Sugar, Dambu Sugar, Triveni Sugars, and other companies. So clearly, in news to come, sugar sector would be the most talked about, and of course, the hot sector.
All right, your views on sugar, Amit?
Well, we have a very positive view on sugar, especially after this crude coming down to around $80. In fact, we believe that crude is in phase of bottoming out, and sooner we should see prices going back above $100. As per sugar stock is concerned, the stock we like at current levels is Dwarkesh, which is trading around 98. We see a good accumulation getting happened at around the zone of 95 to 98. So we are expecting a target of 150. Second stock we like would be Balrampur Chini. Again, we would wait for an entry around 390, 395. And the overall target for Balrampur Chini from 1 year perspective, we see it going beyond 455.
All right, so that's the view coming in on sugar. What about some of these, real estate names today taking quite a knock in trade? What's your take on realty? Would you still be positive given the kind of demand that we have seen of late, or a little cautious given the rate tightening scenario?
Well, real estate is clearly a high beta sector, and whenever market are on verge of a major reversal, generally real estate is the first sector to take the PT. I think still the selling has just begun, and I think if the moment Nifty closes below the 50 DMA, which is around 18,166, you will see wider cracks in this real estate sector. In terms of stock, I think IB Real Estate is one stock. We think it's a good shorting opportunity even at these levels. We think it can go further down to around 60, 65. And the stock which we feel should be, if you're holding from a long-term perspective, should be exited with rich profits. Again, this is one stock which was going through a phase of underperformance. Here too, we see a downside of more than 15 to 20%. So again, Godrej Property can go down easily below 1,000 in the coming days.
Okay. All right, so that's the view coming on real estate. And do some of the metal names fall in the same category then, given the route that we're seeing across the board there?
If you see the correlation of metals compared to the dollar index, whenever the dollar index starts to decline, generally metal is a sector which starts outperforming. We think the selling, what we might see in Indian markets, may start from financials and eventually it may extend to metals. But we are expecting good amount of outperformance from metal, at least from a 2 to 3 weeks perspective. We would wait for entry for Tata Steel at around 102, 103. That would be a good level to get in for a target of 120. Second stock we like would be SAIL at around 75, 78. Again, there we expect a target of 100 plus. So overall, we feel that as long as the copper prices internationally stay a bit, you expect metal to outperform the market.
All right, let's go across to Tanya for some of the other buzzing stocks today. Tanya?
Absolutely. So let's start with JK Cement first. So the company has announced that it will invest around 1.53 billion rupees to buy 60% stake in Acro Paints, and remaining 40% shall be acquired over a period of 12 months. We also have Kalpatru Power Transmission and GMC projects. So these shares are in focus today. So basically, Kalpatru Power Transmission said that the NCLT has approved the merger of JMC projects with the firm, making it one of the country's largest listed engineering and construction companies. So if you see the current share price, Kalpatru Power stock is up around 2%, whereas JMC is down to the tune of 3%. We also have Strides Pharma. So basically Strides Pharma Global PT Limited, that is the step-down subsidiary of this company in Singapore, it has received 94 million AUD as the deferred consideration for the sale of the company's Australian operations in 2019. So the stock is in focus on the back of this news. Ajanta Pharma up to the tune of 4% today. So according to some reports, promoter group entities, Ayush Agarwal Trust and Ravi Agarwal Trust plan to offload around 4.6% stake through a block deal. The deal is likely to fetch 650 crore rupees to the promoters. We also have Triveni Turbine. So the share will go X share buyback today, and the stock is down over share buyback of up to 54,28,571 fully paid up equity shares of face value of 1 rupees each at a price of 350 rupees per share. Lastly, we have Nykaa as well. So shares of Nykaa continued their losing streak today. The stock tanked over 3% to hit a new low. And the stock is down over 58% from its adjusted 52-week high of 364 rupees and over 56% in 2022 so far. And according to the experts, the selling pressure is likely to continue going forward as well. Back to you.
Great. Okay. Amit, so what are some of your key picks then? What would you buy into at lower levels right now? Or what do you feel, are going to be some of the names to take forward into the new year?
Well, at present, I think the more emphasis would be given on pharma. We think pharma was a sector which was going through a phase of underperformance since last 2 months, and right now it's clearly showing you signs of bottoming out or at least a pullback of 15%. We are recommending buying CPLA at these levels for a potential target of 1250. Dr. Reddy is one stock where we see potential to go beyond 5,000 in the coming days. Strides is one stock where we see the stock has already formed a strong base at around 335, 340. There too, we are seeing a good amount of breakout for a potential target of 420. And in the large cap front, I think Reliance is one stock we have asked our clients to accumulate on a long-term basis, but there we have suggested to maintain a stop loss of 2400, because in case Reliance breaks 2400, then you may see a wider cracks happening in the entire energy sector.
All right, fair enough. So that's would you also be sticking largely to the heavyweights then, Amit?
Yeah, of course. See, mid-cap is a sector, but what we feel that it has seen good outperformance from a 3 months perspective, but eventually when the market would reverse, it's expected to go down by at least 20%. And since last 2 days, we have already seen the effect. Although Nifty has gone down by only 2%, but most of the mid-cap stocks are down by around 7 to 8%. So overall, we feel there would be major unwinding pressure on the markets, especially the broader market. The moment Nifty breaks that 17,800 mark, then you will see a lot of retailers unwinding their positions, and I think that would put a lot of pressure on mid-cap stocks.
All right, fair enough. So, what are the kind of levels that you're looking at then when we're talking about, let's say, pre-budget? We're just about a month away. What do you say markets are going to trade in a close range?
Well, earlier our estimate for the market was that Nifty, we had expected it to go to around 19,800, but the caveat was we were expecting that level should happen only if that India VIX, what you call it India Volatility Index, goes down to 9%. In current scenario, if you see, the India VIX has started moving up from 13%, and I think that is a major cause of concern, that if the India VIX continues to stay even at these levels or keep on rising, I think then the chances of Nifty going beyond 19,000 gets negated. In fact, if the India VIX goes to around 18 or 19%, we see the simultaneous levels in Nifty coming to around 16,500 to 16,300. So overall, I see unless we have a strong positioning in the market, or by any way USJNR comes down below 81, only I think then I see a chances of Nifty going beyond 90,000.
All right, so that's the view coming in there on the Nifty. And just taking a look at some of the other names today. From the auto pack, Amit, are you staying away, or is anything looking decent to you? Because a lot of sort of confusion around what's happening there.
Well, we had a positive view on auto, especially we had recommended clients to buy Maruti at around 9,000, 9,100. But after the move from Bank of Japan, I think there is a good chances that auto sector might fall by another 15 to 20%. Maruti has broken an important support at around 9,000 on closing basis. So now we think stock would eventually slide towards 77, 7,500. from a trading perspective, I think Tata Motors become a good shorting candidate even at these levels. After recent close below 410, we see the stock price going all the way to 335 to 340. So we are recommending clients to short Tata Motors at these levels with a stop loss of 410. Stock which we are recommending clients to buy from a long-term perspective or on a tranches, that would be M&M, where we have recommended to buy clients to buy it around 1150, 1170 zone for an eventual target of 1350, 1400.
Okay, Reliance, the news today with regards to the Metro acquisition. What are you making of that, Amit? It's one of the nation's biggest retailers, and it's expanding its footprint, and now Reliance taking over.
Well, Reliance, we have a very positive view. In fact, is the only caveat is because Reliance forms part of the Sensex top three stocks. I think if the Nifty starts cracking below 17,000, you may eventually see even selling in Reliance. There's a good base which is seen in Reliance Industries between the zone of 2400 to 2550. So we see in case there is a decline in the market, ideally Reliance should bottom out around 2450. But as I said, if it breaks 2400, there would be a lot of unwinding pressure in the market. So Reliance can eventually drop to around 1800, 1900 levels. So what we feel as of now, the view remains positive, but we have told our clients to maintain a closing stop loss of 2400 for Reliance.
Great. Amit, thanks so much for joining us on the show today. 250 points down on close. We just got a few minutes left to go, but markets clearly today reacting to some of the fears in the larger ecosystem. Still, perhaps nothing too much to worry about. India is just about started to cool off there. But 18,121 on the Nifty and 68,18 on the Sensex, 0.4% lower is where we're ending up today, erasing some of the gains that we made in yesterday's session. Let's see if those inflationary fears as well as COVID fears start to take over as we progress into another week of trade. We'll get a better idea, of course, over the next couple of sessions. That's all from us for now. Thanks for watching.